good one today. Looks like Mark just jumped on. But yeah, we got a lot of cool stuff to share.
Hey, Matt.
Hey, Mark. So I got a lot of stuff to cover today. So we're gonna have to burn through it. We'll go slow enough that everybody gets it though. So did you guys watch the last week's video? Get a lot out of it?
Mm-hmm.
Yes.
Yeah, it was a good one. It was one of my favorite ones.
I haven't had any bad ones. I mean, they've all been very educational for me. And then the emails you just sent us that told us about how if you put all your money into properties and you don't fix and flip and do wholesaling at the same time, you'll run out of money.
Mm-hmm.
That's exactly where our world is. Exactly where our world is.
It's almost like I've been there before, right?
Yeah. So that was exciting to find that.
Yeah. And most people, so, there's, as far as, and we'll give it a couple minutes, we'll see if some more people are going to jump on here, but a lot of people are watching the replays as they got stuff going on during the day. But along those lines, what happens is some people, they want to own rental properties so bad that they they take all their money and they run themselves out of liquidity, just in terms of cash flow. But I mean, obviously owning rental properties is great. And that's the end goal for a lot of people, is to get to the point where you do have that passive income coming in all the time. But you have to do it at the right speed,
Exactly.
So no, that was good. And the reason I talk about that is because so many people follow the BRRRR, the BRRRR technique.
Yeah.
I still get people will get a hold of me all the time. Usually it's people that are newer into real estate, and they'll say, hey, I just quit my job. I'm buying houses and I'm going to refinance them and pull my money back and repeat process and all that. And I'm like, well, do you have other income coming in that the banks will, look at as income? Because if you don't, eventually the banks are going to ask you for your tax returns and you're going to show no income. And with no income, they're not going to keep letting you borrow money. So, that's usually a tough lesson, but a lot of people don't listen to me. It's like, I've been there, I've done it.
Well, see, and that's where it was hard for us, because as you know, we started out with Dean.
Mm-hmm.
And that's what I took out of his. And I told Ben, that's what the difference between learning with you. And like I told you that time, I want to be on your team. Remember that one class we were at with Dean?
Mm-hmm.
And we could either have you teach or him teach. And I said, I wanted you. Remember?
Yeah.
And it's because with you, you're so thorough. You're not hyped up. You're just sitting here giving us the facts and going about life. But with him, we picked and chose what we wanted to hear instead of what we needed to hear. And that was a big.
The difference is too, is, Dean's more of a personal development coach than he is like a real estate guy. And that's nothing against Dean for that. I mean, he was pretty transparent that I was always the real estate guy,
Yeah.
I mean, I created all of Dean's real estate education for 8 years. And so he didn't try to hide that at all,
Oh.
I'm not saying Dean wasn't doing real estate, because he was. I mean, he still to this day owns, from where I'm sitting right now in Iowa, he's probably got 250 houses, so
Wow.
He owns a lot of real estate. It's just that he wasn't in the day-to-day, grind on it. His passion is personal development, so, which is great. But we've had a lot of people, we've got a lot of people jumping on here, and I know this is going to take a little bit of time. What we're going to really be focusing on today is the whole credit game, how to improve your credit score. We got a lot of stuff to cover, and so I want to kind of jump in there. You guys, if you would do me a favor and just hit your mute button. That way, if there's any background noise, it doesn't interrupt everybody else. And then if you have a question, just hit me up. You guys know how it works. If you need to ask me something, you need me to elaborate, by all means, ask your question, or you can wait until the end too. And I always, even if we go over on time, I always stick around until all the questions are answered. So let's jump into it. So, guys, I have one cool story is And I'm going to mute somebody here. One cool story is when I was growing up, my dad was very, very big on credit. He didn't have any cash and never had any cash. Never. My parents combined never made more than $25,000 a year. And that's combined, both their incomes. So we grew up really poor. And my dad always said, you know, the only way you're ever going to be able to buy anything is you got to protect your credit, which is great. I'm glad he gave me that advice. And my dad always, you know, he couldn't always pay his bills, but he was very, very big on don't miss a payment. And so when I was real young, I'll never forget, you know, my dad he knew credit was going to have to be my thing. He didn't think I'd ever become a millionaire or have a lot of money or anything like that. And so he always tried to build our credit. And so when I was young, I got up one Saturday morning, and I don't know how old, I can't remember the exact age. I must have been 13, 14 years old. I get up in the morning and he goes, Matt, put on your shoes. We're going to the bank. And I'm like, what? Why are we going to the bank? He goes, because you're going to take out a loan. And so he had me take some money that I had saved up. And what we did, I didn't know what I was doing. I just was doing what he told me to do. I didn't know how important it would be in the future. He always had me doing something. I just followed what he told me to do. And so basically what he had me do is take out a secured loan. He had me put I don't remember, the numbers are so small, but it's not about the numbers. It's about the principle behind it. Is he had me put in, I think, $200 or $250 and literally did a secured loan on that money. And so you put the money in and you sign the paperwork, and now the money is used as a secured loan. It was a very small amount of money. I don't remember the exact amount. But I said, okay, Dad, what do I do next? I said, do I get to, now I have this loan and I have money, and can I spend the money? Nope, you're not going to touch the money. You're going to pay the loan off. And so I waited a few months and I made some little tiny payments, and then I would pay the loan off. And then he'd have me do it again. And then he'd have me do it again. And he just had me repeat this process. And so I never checked my credit. I didn't know what my credit score was. And when I got into real estate, I knew I had good credit because if I ever got like a cell phone or something, when those first came out, when I was like in 1995, I got my first cell phone in 1995 or 6. And I just remember the lady said, oh, you've got good credit. But I didn't know what good credit was. I didn't know there was a score. I just knew, well, she said I had good credit. And I assumed that would be the case because anytime I had a bill, I try to pay it. And so long story short, just to not get too long-winded, I'm 30 years old. Now, time goes by. I turn 30 years old, and I go to get my first loan. I never had bought a house. I always rented. And so I go to get my first loan on an investment property, and the gal, I'm still friends with this loan officer to this day. We're friends on Facebook. We became very good friends. She taught me a lot on loans and stuff too. She pulled me aside. She'd always go in the hallway, always teaching, because I'm always asking. And so she calls me up. I have them run my credit. I'm scared to death. This is the first loan I've ever taken out on a house. I don't know what the heck I'm doing. I'm trying to learn. And I don't hear. I have to fill out the paperwork, and I don't hear from her. A week goes by. A week and a half goes by, 2 weeks goes by, and I haven't heard her. And I'm like, I got turned down. I'm not getting it. I'm not getting the house. And so all these negative thoughts go through my mind. Well, now I'm going to let down this realtor. And we looked at all these houses, and now I can't buy the house, and I'm going to look stupid. And all these emotions go through. And finally she calls me, and I called her because I was tired of waiting. And I'm like, hey, I just wanted to, her name's Allie. I asked her, funny thing is, long story short, they asked me that she worked for Quicken, and they asked me to be on the commercial for them as a thing after a few years later. So anyway, I asked Allie, I said, well, did I get the loan? And do I qualify? And she's like, yeah, you qualified. She's like, I meant to call you. We got busy. We do 50,000 loans in her office. They have 50,000 loans every 6 months. So imagine this loan officer. At that time, she'd been with Quicken for 10 years. They do 50,000 loans every 6 months. That's 100,000 loans. She sees a lot of credit applications gone by in her desk in 10-year period, $100,000, like all these loans. And she goes, Matt, I got to tell you, she's like, you have really good credit. And I had never bought any, like, I don't know how, like all this stuff my dad did for me, this is how it worked. And so I said, well, what's my credit score? And she says, well, I tell you, I've been here 10 years. We process 50,000 loans every 6 months. I can count on one hand. You have the top 5 credit score I've ever seen. And I'm like, what's my credit score? She's like, and she goes, what's weird is you're 30 years old and none of the other 4 in the top 5 best credit scores I've ever seen, the other 4 are 20 years older than you because it takes time to get a credit score this good. And I'm like, what's my credit score? She goes, you have an 822. So an 850 is perfect. I had an 822 and, I don't even know what the heck I'm doing. And so the reason why is because my dad had me start building credit. Now, my dad is not a credit genius, okay? He just knew I needed credit. If I'm going to survive, the way he survived was he would borrow money, and that's how he paid his bills. And so he knew that, I'm going to have to teach my kids to do the same thing if they're going to make it through life. And so he always said, you'll never have enough money to pay off a house. You'll never have enough money to pay off a car. Always protect your credit. You're going to need it to get stuff. So I say that. Now, the cool part is I had an 822 credit score as a 30-year-old guy with a negative net worth. Okay. My net worth was negative. I had no cash. I had $20,000 in credit card debt. I'm trying to get into real estate, but my credit score was an 822. Okay. Now, I'm telling you right now, my credit score right now isn't an 822, okay? I've had a lot of loans. I get a lot of inquiries. There's just but my net worth is 100 million times higher than when I was 30 years old. So the credit is a game. You want to win the game. But the bottom line is I had it seems like it's breaking up. Hang on a second, guys, here. I'm going to switch internet. Here we go. Okay, can you guys hear me better now? Is that better?
Yep.
I just switched internet.
Yes.
Okay, great.
Yep.
Thank you, guys. You didn't miss anything as soon as I saw it get unstable. So the credit score is a game, okay? How can a guy with a negative net worth and no cash and no assets have a better credit score than somebody with an 8 or something figure net worth and lots of liquidity and lots of assets? It's a game. You have to learn the rules. 2 years ago, I did beat the 822. 2 years ago, I had an 835. It shot up to an 835 for a short amount of time. 850 is perfect. I'll never hit that. I do too many inquiries, and you'll see why. I don't care to have an 850. It doesn't matter. I don't need an 850. So anyway, that's how I want to start with that story, how a broke dude had really good credit, but no assets and negative net worth, to now multi-millionaires. I know a guy with a $40 million net worth. Half of that 40 million is in cash, and he has a 600 credit score. Guess how many loans he gets turned down for in life? None. He gets approved for all of them because credit score doesn't matter. At some point in time, if you're good at buying assets, you have good financials, credit score no longer matters. Now, with that being said, you want to have a good credit score. It just makes life easier. There's a lot of different stuff that you can do. When I had, in my credit score doesn't fluctuate always. I had some fraud hit my credit a couple of years ago or a year or so ago, where somebody got my credit score and started taking out all these loans on the East Coast. And next thing I know, they think I'm a general in the military because evidently that's what somebody took my credit score and said, and my credit score plummeted. But other than that, I keep a pretty solid credit score. It jumps around a little bit, but you don't need an 850 credit score. You don't even need an 800. Although if you do have it, the higher it is, the easier some things get. But the main theme I want you guys to know is this credit score is a game. It's a game you have to play. Now, there's a lot with that. You can do things that help your credit score. So I've got a whole bunch of notes in front of me. But I know a guy with a $20 million credit, a $20 million net worth, high liquidity, that a couple years ago got turned down for a loan on a property because he had this big operation and he had a lot of moving parts. And out of his hundreds of properties that he owns, somebody on his team forgot to pay a water bill. Water bill is $120, and the water bill didn't get paid, and that dropped his credit score like 100 points and dropped below the threshold of a specific big bank, and they wouldn't do the refi. So that's the wrong bank, right? If you're working with a bank that you have to follow the rules where it's either a yes or a no, whether or not you get approved for the loan, that's typically a bank that is, those loans get sold to Fannie Mae or Freddie Mac. And those are yes, no statements. Like there's no, hey, common sense. Hey, somebody forgot to pay a water bill. This guy's got, $5 million in cash sitting in a bank account. He didn't pay a $120 water bill. I think there's some logic here. We need to go ahead and prove. I know guys on this opposite of that in the Quad Cities here. I own the largest bar in the Quad Cities. Now I don't own the business. I don't own the actual bar. I own the building. And right next door, there was another bar that went into foreclosure. I looked at buying it. And I'll never forget, I looked up who owned it, and it just so happened we had the same banker. And the next thing you know, I knew this owner, he went into foreclosure. The reason why is because when he went into foreclosure, it was because the business just wasn't doing well. And he just said, I'm not going to pay the mortgage anymore. It's just the business is bad. That's a separate entity. I don't own any other assets in the entity. The bank can have it back. I got hundreds of apartment units over here. All those pay me a lot of money. I'm a multimillionaire, but I'm not going to pay for this building. And so I found out about it. And the next thing you know, I see that this same guy that just went into foreclosure and lost this building, he closed on a 44-unit apartment building. How do I know that? Because he bought it from me. He bought a building from me. And I'm like, how can that be possible? I literally did all the research, found his loan officer, called his loan officer, and I threw a fit. How can a guy who just went into foreclosure on a building buy a building for me with financing from you? You financed him, and he just went into foreclosure. How is that possible? And it was very simple, Matt. The asset's a good asset, and that was a one-off situation, and we don't care about what it did to his credit. We like the asset. So I'm telling you guys, it's a game, okay? It's a game. If you know how to play the game, you can get a lot done. So I get a lot of people that say, Matt, I love the whole bank financing concept, but it won't work for me because I don't have good credit. And I tell you those stories to tell you that it doesn't always matter. What you guys are learning from this whole banking process that I'm putting together for you, this whole product, all these Zooms and the book that's coming out soon, this is the ammunition you need to be able to get the loans that you want to skyrocket your portfolio. And the thing I want you to remember is, of course, you want to keep your credit as good as you can. Of course you do. Of course you want to pay your bills. But if something happened in the past that you can't go back in time and fix, that doesn't mean you give up. That means you find a way. And embedded in all this information I'm giving you is the way. So let's keep going here. So with a credit score, we're going to talk through what all of these numbers mean and what makes up a credit score. So first of all, perfect credit is an 850 credit score. What I like to tell her, so if you look at the chart, and by the way, in the book that you guys are going to be getting, hopefully next week, I'm working really, really hard to finish this book, and I'm telling you guys, this book is freaking awesome. It's going to be way bigger than what I thought. I originally was planning on a 100-page book, way bigger. And it's probably it might be the best product I've ever created. It is unbelievable. And I forgot, the crazy thing is, I created the table of contents of what I envisioned this book to be, but I forgot all of the stuff in here that I just never have taught anybody. And when I built the table of contents and I started building the chapters, I'm like, holy crap, I've been keeping a lot of stuff to myself that I haven't ever shared. And all this knowledge came out, and it's in this book, so it's probably going to be closer to 200 pages, and it's amazing. And so I'm not to toot my own horn, I'm just, a lot of stuff I get done with, and I'm like, it's never good enough. I got to go back and redo it. This is going to be mind-boggling. So anyway, on your credit score, you know, anything, you get much below a 600 credit score, that's considered a really poor credit score. Again, you can fix it. You just have to know what to fix, and we'll go through that. And then you get anything from like a 600 to a 670, that's considered, you know, kind of a fair score. It's not terrible, but it's not great. And then you get anything from a 670 up to about a 740. That's a pretty good score. Like that, there's not really much you can't accomplish with a 740 credit score. And then anything you get up to, you know, up to 800, and that's considered a really, really good score. And then anything over 800 is just ridiculously good. So you want to be like, the goal you guys should hit is, if you don't already have like a really high credit score, your first goal is to get to that 730 mark. And then from 730, you want to try to hit a 780. And really, if you achieve a 780, you've achieved everything that you want. Anything above a 780 is really just extra that you really don't even need. Like every bank, you get to an 800 credit score, and like you literally can just walk in and basically kind of get what you want. Again, it's a joke. It's a joke, guys. I mean, when I had an 822 credit score as a 30-year-old with negative assets, they were willing to give me about anything. I had no ability to pay for it. None. Okay. But my credit score was high, so he's qualified. Okay. So again, an 800 credit score, very rare, because I told you the story, you know, 50,000 loans with this loan officer every 6 months, and she only counted 5 people with a higher credit, or with a credit score near mine. And she told me the 822 was the highest she'd seen. So four other people had a credit score near that. So you don't see very many people with an 800 credit score. It doesn't happen very often. One of the things that crushed my score soon after 30 was I started buying all these houses, and I didn't know which banks to talk to. And I would go to banks like Wells Fargo, big banks that sold their loans to Fannie Mae and Freddie Mac. And Bank of America, I did a whole bunch with them. And what happened is, every time I got a loan with these guys, they're reporting to the credit bureau, I'm showing more debt, but they don't know about the how much rent I'm getting. So my net worth was growing, my cash flow was growing, and my credit score was dropping. Think about that. I had more assets, more cash flow, but my credit score was less. But if you looked at me on paper, I was a better candidate to borrow money at 30 years old with no assets. So I learned very quickly that you can't do a bunch of loans with banks that report to the credit bureaus and that sell those assets off to Fannie Mae or Freddie Mac, because your credit score will take a beating. So let's talk about the breakdown of credit real quick. First of all, 35%-ish. Now, I'm going to give you some percentages. They always fluctuate a little bit. It's never exact, but it's pretty close. So 35% of your credit score is based on your on-time payments, okay? So if you're good at just paying your bills on time, that will account for a big portion of your credit score. So you know that's rule number one. Pay your bills on time, and your credit score will do pretty decent. So we don't really need to talk about that a ton. You really should be like, if you have, and the things that will get you are the things that I was just working with somebody the other day, and he'd done really well. His credit score was low. He had built up to a 750, 760 credit score within like 2 years or less from a zero credit. He didn't have a lot of credit. He built up to 750, 760. And then one little bill that got missed, like a $20 or $30 bill. I think it was a water bill, got missed, and it dinged his credit. He lost 100 points. Think about that. Couldn't believe it. So the one thing you can do with payments that I tell everybody to do is get them on ACH. Don't let a $50 or $100 water bill or some small little credit card. I'll never forget one thing that hit my credit like 4 or 5 years ago was I had a credit card that I had never used in years. And I hadn't used it in so long. I never even logged onto the computer to check it. I just knew it sat in my safe, and I just never used it. And they hit me with an annual fee of like $95. And then I didn't pay the payment on the annual fee because I didn't have it set up on ACH. And next thing I know, I check my credit and I've got a late payment. Like, whoa, I didn't even use the card. I haven't ever used the card. So you got to watch that stuff. So make sure you're always setting up, set your bills up on ACH and set your credit card minimum payments. Even if you go in and manually pay the bill, set your credit cards up to have an ACH. If the payment isn't made, it just automatically gets paid the minimum. Okay. And usually that's super, super cheap, but it's free to set up. So make sure you do that with your water bills. If they're reporting to your credit, make sure that happens. Like I have a humongous company, hundreds of houses, and all these, water bills get paid every month. And I'm like, to my team, I'm like, hey, you can't ever miss. Make sure you've got an amazing system, because one water bill gets missed, it dings my credit. So make sure that you get that stuff set up on ACH. Now, the next important thing that you have to watch for is your credit utilization. Okay. Your credit utilization. This one accounts for 30% of your score. Now, what this means is, let's say you have a credit card, and on that credit card, it has a credit limit of $20,000 on this credit card. Okay. If you're sitting at, let's make it even easier numbers to just figure out. So if your credit limit is $10,000 on the card, and you have $1,000 you've used on that card, then your utilization rate is only 10%. You want to keep your credit card, or you want to keep your utilization rates at 10% or less in best case scenario. Okay. So now here's the crazy thing. Here's the thing I didn't know. I had to learn it on my own, because a few years ago, I checked my credit. Now I was using my credit cards, paying them off. As soon as the bill would come, pay off the credit card. And my bankers would call me, Matt, you've got this American Express. So guys, I don't want to scare you with numbers, but I have huge limits on my credit cards, and we use them a lot. I use them to buy materials and everything else. And so my American Express, I'd have like $300,000 American Express bill, but I would pay it off at the end of the month. But the banker would call me and say, hey, we just ran your credit and you owe American Express $300,000. I'm like, no, I pay it off every month. Here's the trick, guys. Here's what I didn't realize. If your credit card bill comes due, let's say it comes due on the 15th, and you have, your bill is $10,000, and you pay it off on the 15th that day, the credit card company still reports to the bureau whatever the bill due amount was. So if you have a $10,000 credit card and you put $10,000 on it and you pay it off every month like clockwork, and you think you're doing a good job, that's not what's getting reported to the credit bureau. You're at 100% utilization. Your credit score is going to take a massive drop. Here's the trick. You have to pay the credit card off before the due date. So if your credit card is due on the 15th, pay it off on the 12th, so it's at a zero balance. And then when the credit card company reports to the credit bureaus, you show a zero balance. Your utilization is really low, zero. Your credit score will massively jump up. So you have to, nobody teaches you this stuff. So you have to pay it off early. So I have this really weird habit. I'm like when it comes to paying bills, I'm like kind of like super detailed, but I pay my credit cards off every morning. And so I never allow my utilization to go real high. Now, you might not be able to do that, and that's okay. It doesn't matter. I'm going to teach you a trick to trick your utilization rate. So just remember, the main thing to know is 10% utilization or less is ideal. It accounts for 30% of your score. So if you just get paying on time right, and you just get utilization right, that's 65% of your score. Those are the main two things I want you guys to really know and get right on your credit score. Now, let's say that you have, you're like, Matt, I use my credit cards for materials and rehabs and stuff like that, and I can't pay them off in full every month. Sometimes they go 2 or 3 months and I just pay, a little bit on them. So your utilization rate's going to get kind of crushed there. Well, you have to trick the system. It's a game. You have to raise your credit limits and add more credit cards to increase your credit limit. So, for example, same situation. You have a one credit card. It's got a $10,000 limit, and you run it up to $10,000, but you needed it for materials, and now you can't pay it off until the house sells, which is in 3 months. So you're at 100%. Well, what if you applied for a new car? Well, two things. First thing, call the credit, especially if you've got decent credit. If you've got a 680 credit score to higher, I would probably call the credit card company and ask for an increase day one. So if you have a card with a $10,000 limit and you've had this card for years and you've done a good job paying on it, call the credit card company, ask them to bump it to 20,000. Okay. They'll usually do those kind of jumps. So now your utilization is immediately 50%. So we're getting there. Next thing you do is get another credit card, open up another credit. I'm not telling you guys to use these credit cards. You just have to play the game and get your credit limits high enough that your utilization drops automatically. So let's say you got another credit card and you got approved for $20,000 on that credit card. Now you have $40,000 in credit card limit, but only $10,000 in debt. So now you're at a 25% utilization. Your score is going to go up again. You could add another credit card. The thing is, if you're going to do this trick and add credit cards, you're going to get hit with an inquiry. Okay, and we're going to get to inquiry in a minute. An inquiry does almost nothing to your credit report. It's very small, almost has no impact. Typically, when you call and you get a new credit card or you ask to increase your credit card, that inquiry will drop your credit score 3 to 5 points. Okay, it's not a ton, but those inquiries will stay on your credit report for 2 years. Now, they'll drop off after 2 years and they disappear. But an inquiry, you guys, is just part of the game. You're going to have inquiries. I have massive amounts of it. A couple years ago, let's see, 3 or 4 years ago, I had I had house loans from 23 different banks. Okay, so I had 23 different banks across all my portfolio. Well, guess what a bank does every single year like clockwork? They check your credit. Once a year, every bank would check my credit. So I'd get 23 or 24 inquiries on my credit report every year, not counting if I applied for a new credit card or if I applied for something else that had to pull my credit. So I would typically have nearly 30 inquiries on my credit report all the time. That's an insane amount. But I had an 835 credit score with 20 to 25 inquiries all the time. So when you first apply for a new credit card, your score is going to drop 3 to 5 points. But after 90 days, it's going to ease back up. But that inquiry will still be on your credit report for 2 years, and then it'll fall off after 2 years. So the trade is, if you apply for a new credit card and you get approved and your utilization rate drops because you got more credit line, your credit score is going to outrun and go up faster then the inquiry is going to hurt it. Does that make sense, you guys? Like, it's not an even trade. It's better to increase your credit lines. And you might say, well, Matt, I don't really need more credit. I have plenty of credit. Well, let me tell you guys, that's the time to get more, because when you really do need it, you won't be able to get it. If your credit takes a hit, or all of a sudden you're in a little bit of a bind financially because your liquidity's tight or something, you won't be able to get it when you need it. Always apply for credit when you don't need it. Have it available, even if you never use it. I have credit cards that I never use with huge open, credit lines, and they just sit tucked away. They're not even in my wallet. They're just tucked away just in case. Always dig your well before you're thirsty. Okay. All right. So again, if you get two things right, get utilization right and get on-time payments. Now the inquiries, that's only accounts for 10% of your score. We just talked about that. Okay. But again, your score will drop 3 to 5 points, then it'll recover over 90 days. That inquiry will stay on your report for 2 years. But it's only 10%. Now, the other thing is there's the length of time you've had credit is a good one. Now, it counts for 15% of your score. So in other words, if you have a credit card that you've had for 10 years, and let's say it's got a $5,000 limit, and you're like, I've had this credit card for 10 years. I don't ever use it. It's got a small limit. I'm just going to close it. Never do that. Never close that card. Even if you don't use it, don't close it. Because if you do, your average credit age drops, because that's a 10-year card it's been open, and you've just hurt your utilization because now that 5,000 is gone. You should never close a credit card. Leave them open. If you don't want to use them, that's fine. Leave them open. Don't close them. Don't use them if you don't want to use them, but let that tool work for your credit score. I was talking to Trina the other day, and she's like, yeah, I just closed this credit card because I never used it. I'm like, why would you do that? Never do that. I had a whole bunch of Chase credit cards from when I first got into real estate. Somehow I applied for them. Of course, I got accepted because my credit score was at 822. And then I never used them. They sat tucked into a shoebox somewhere. And the next thing you know, I got an alert from Chase that they closed those cards. Terrible. You don't want that to happen. At least use them once a year, even if it's to fill up a tank of gas. Use them so they don't close them, because that crushed not only did I lose the utilization because of the credit lines on those cards, but I also killed my average credit age. So length of history is really good. If you own your personal residence, and you've had that same mortgage, if it's a 30-year mortgage and you've had it for 30 years, that's going to be an amazing boost to your credit, because that credit life is so long. I recently refinanced some loans that I had back when I was 30 years old. I had a few houses that I just had for a really long time, and I refinanced them, and my average credit age dropped drastically, and it hurt my score. But you've got to remember that. So you open a credit card, leave it. Sometimes your home mortgage, if you refinance or you move or something like that, you sell the house, that will reset that credit age. So I like to leave credit cards open for a long time. Again, it's only 15% of your score, but if you increase your credit age, that's 15%. You pay your bills on time, and you really use your utilization. Think about that. That's 80% of your score. It's easy to get that stuff right. And then the only other thing that really affects your score is, and we talked about, so if you think about it, 35% payment on time, 30% utilization, 15% credit age, and 10% utilization, it only leaves 10% left. And that 10% is just the type of credit you have. Okay. Do not get department store credit cards. Don't do it. Those type of credit cards hurt your credit. You don't want to go like, I didn't know what I was doing. When I was 30 years old, I went out and bought a new bed. I'll never forget this, you guys. I just got into real estate, I had no money. I had sold all my furniture to buy my first house. So some of you guys might remember that story. I sold everything I owned. I buy my first house, and I'm like basically sleeping on the floor, and I need a bed. And I didn't have the money to buy a bed. And so I went to a furniture store, and I was able to finance a bed. Now think about that. I finance a bed. You can come a long ways in a short amount of time. So I finance this bed, and I get this credit card from the furniture store, and it's just terrible. Like, you don't want to do that. You don't want to get department stores. If the things that help your credit are Visa, MasterCard, American Express, Discover. Those are the good ones to have on your credit. Those help your credit score. Department store ones hurt your credit score. Those are good ones. The other ones that are good to have on your credit are installment loans. If you buy your car, some people like to pay cash. That's great if you want to do that. I've done a lot of that in my years as well. But if you if you are going to finance a car, keep the loan for a really long time, because that'll help your credit age. And installment loans look good on your credit. So I'm not saying, and interest is so cheap, like it's almost like free right now. So maybe it makes sense to finance a car. I'm not telling you to do that or not, but if installment loans do look good, and so do mortgages for your home mortgage. Those look good. So that's kind of credit mix that you kind of like to have with your credit. So that's it. That's the credit. That's how the credit kind of world works. So you make sure you stack that stuff in your favor. Okay, let's keep going here. Any questions on anything that I've covered to this point? Anybody? All right. Let's see here. Any questions? No questions? Let me see here. All right. Oh, make sure you guys always check your credit. Keep an eye on your credit. When I had that, when that guy somehow stole my identity and started taking out loans through some Navy Federal Credit Union, there's not even one within like 1,000 miles of where I live. The reason I figured that out is because I had Credit Karma. I checked my credit score through Credit Karma. When you check your own credit score, that does not hurt your credit. So I mentioned before, if you call a credit card company and start a new credit card and they pull your credit, that will hurt your score. There's an inquiry on your credit score, and 3 to 5 points it'll drop. But if you pull your own credit, it does not hurt your score. So there's two. Now you don't have to do two. I just do two because I try to keep a close eye on my credit. I think I pay a fee to Credit Karma, but you can do a free version too. But I monitor my credit with Credit Karma. Then I go in like once a month and check my credit, make sure. And that's how I figured out that this guy had stolen my identity, and I had to get that wiped off my credit score, which is no problem. But I also belong to Experian. I found that Credit Karma's, like, some of their stuff isn't 100% accurate on your score type. It's really conservative. But I like Experian because that's actually a part of the credit bureaus. And what they report is dead on. It costs a little money. I think I spend like $24 a month on Experian, but I keep a close eye. And now they alert me every time somebody pulls my credit. So now there's really no chance for a lot of fraud to happen, because you would get an alert right away, like, hey, it'll give you an alert like, hey, Visa just pulled your credit. And like, wait a minute, I didn't check my credit for anything. Why is this happening? And you might be able to log on and see, oh wait, that's my bank or something like that. So I understand that inquiry. So keep an eye on your credit. Make sure you're always checking it. You should check it. I would check your credit once a month. Just make sure everything looks good. It's kind of neat because Credit Karma kind of shows you how to improve your score and what you could do better and what's making your score look amazing. And so it's just good to keep a close eye on that. Now, most people don't know this, but if you do have something on your credit report that it shouldn't be there. you should never, like, so the worst thing you can do is let's say a credit, let's say a water bill for $50 hits your credit, late payment. Okay. Most people say, oh, no big deal. The $50 isn't a big deal. I'll go pay that. And then I've got that. And now that's taken care of. And that's not the case. Yes, the bill will be paid, but that late payment's still on your credit report. And so if there's a mistake and you don't think that should be on your report, you need to call the company. First of all, call the company and say, hey, I paid this bill. I want that late payment removed from my credit. If they refuse, go to cfpb.org. cfpb.org or let me verify that. I think it might be gov. And file a complaint. Okay. Now the CFPB doesn't mess around. They are on your side. I don't have it right in front of me, guys, but if you Google CFPB, it'll come right up. Go to their website. Consumer Financial Protection Bureau is the website, .com. But you can do CFPB as well. Go on there and dispute. It takes no time to dispute, and they don't mess around. What happens is if you dispute it, the company you're dispute, they contact the company, and if that company doesn't resolve and get back to them within 30 days, it's automatically removed. So if you have a late payment, don't just pay the bill. First, try to get the company to remove it, and then if they don't remove it, then go to CFPB and get it removed. I had a bank like 2 years ago had a charge on my account that showed a late payment that wasn't, like, this is a bank I was doing a lot of transactions with, and they were not, I was like, that's not legit. That is you guys' fault. That does not belong on my credit. You need to remove it. And they're like, man, our hands are tied. It was a bigger bank. They're like, man, our hands are tied. We can't remove it. Like, that's just not how it works. So boom, I went to CFPB, made it disappear. It evaporated from my credit report. My credit score went back up. I've helped a lot of people so most people don't realize, but that CFPB does not mess around. And so it's tough. It makes life tough on these guys, and you can get a lot of stuff removed that way if it's on there. So if you see something on your credit report, ask them to remove it. If they don't, contact CFPB, file a claim, a complaint. That takes 3 minutes to fill out the complaint form. It's not a difficult task at all. You can get it done really fast. And then you're more likely to get some movement. And so, and then you can pay the bill. Okay. But don't just pay it off. The other thing too is couple years ago, a local credit union that I did a lot of loans with, there's a guy in town here who went into foreclosure on like 100 houses. And so when they did that, this credit union took a $2 million hit. And so everybody that had all the commercial division, everybody that had loans, like I had a 10-year run with this credit union. They were great. I was very close with the loan officer. But when this happened, they got rid of all of upper management. All these people from the East Coast came in, took over the credit union. This credit union is in really bad shape. The commercial division is now gone. And the lady that I worked with was at this credit union for 30 years, and she got let go. Like, it was just a terrible situation. And so, but this big executive gets on he's giving me problems. And I'm like, hey man, I'm a good borrower. Like, you're canceling. Like, he was trying to cancel all my loans. He wouldn't renew my line of credit, and it just got bad. So I'm like, hey, we need to jump on the phone. I don't know who you are, but I don't like the attitude. I don't like the way you do things. So we got on the phone, and I told him, I just said, hey, he was telling me this, he was telling me that, and this is how it's going to work. And I just said, you know what? I'm just going to contact the CFPB, and I'm going to take this up with them. And immediately attitude changed. So it's a little bit of a tool to keep in your tool belt, because it is a powerful organization, and they are there to protect you. So if you get, I think there's, you know, if somebody gets too many complaints from the CFPB, it hurts their, like the institution, the bank institution, it'll start to hurt their reputation with the CFPB, and it's a whole big, opens up a whole nother can of worms for them. So use it only when you need to, but when you need to use it and get that that stuff removed. Let me see. A couple of people had a question. Yes, but you do want to pay it if you owe it. If it's a legit bill, just don't pay it and expect it to go away. Cut a deal where, hey, I'm going to pay this, but I need that to be removed, and then we'll get you all squared up. Try to make a deal like that, because you just don't want that stuff on your credit. A late payment stays on your credit report for like 7 years. And so, I mean, your score will drop immediately, and it will come back up over time, but you still just don't want it on there. I mean, all that stuff adds up, guys. Like if your score drops 50 points, that could mean a big difference whether or not you get a line of credit or you don't. So don't just accept it, always fight. Okay. How are we doing on time? We've got about 10 minutes. Any questions on any of that? Any other questions?
Matt, can you tell me if you're working with a bank that does not show up on the your credit score, it doesn't report, then is that okay? Or because like we got mortgages and car loans and things like that too.
Yeah.
You don't want them to show?
No. So if you were to pull my credit right now, I own hundreds of houses. If you pull my credit, it looks like I own one house, which is the personal house that I live in, the one I'm sitting in right now. That's it.
Oh, perfect.
None of my other houses show up. You don't want that. If you're a big real estate investor and you start buying a lot of houses and all those mortgages hit your personal credit, it's going to drop your score, because the credit bureaus don't understand that those are asset and income producing properties. They just think it's debt. You see what I'm saying?
Yes, I do.
So you don't, that's a good thing that they don't report. That's one of the questions I ask a bank when I'm interviewing the bank to see if I'm going to start doing loans with them. I ask them if they report to the credit bureaus, and if they do, I don't go any further with it. I don't want that stuff on my credit, because think about it. If a bank has $1 million or $2 million legal lending limit, I'm going to run them up to whatever their legal lending limit is, given enough time. And so that's a couple $1 million again on your credit report. It's going to hurt your credit.
Okay.
That's the one thing that I learned early on was I stacked up 15 or 20 loans against my credit, and it hurt my score. And again, the same thing that you're building is this, with these banks, is the same thing that's going to end up hurting your score, and you may disqualify yourself. Okay. So that's important. So that's a good question.
Thank you.
Any other questions? I know we're winding down a little bit here. Let me see some of the other stuff that I can cover with you guys.
What do you do, Matt, about like if we're going to add another bank to, we do, which I know we're not supposed to, but we do all of our work or our houses with one bank. So say we're going to add another bank, and this bank wants, our old bank wants 100% of everything we own. So they're taking all our liquidity and all our equity. So how do you go to another bank to get started?
Well, it's super simple. First of all, going back on your statement, you don't think that having one bank, all your stuff is what you're supposed to do or not. Well, first of all, if you have multiple, if you're working with multiple banks, like I don't believe in working with just one bank. I believe in working with multiples, because it's kind of like in the real estate world, it's kind of like if you go to make an offer on a house and you're the only person offering, you're in a good spot, right?
Correct.
But in the banking world, if that bank knows that you're only working with them, they control you. They make the decisions, not you.
That's where we're at. Yeah.
So you want to add a bank, and all you have to do is go go find a new bank that you like that will do what you want them to do. My standards are, I want to make sure that the bank doesn't report those loans to my credit. I want to make sure that the terms of the loans are what I'm looking for. Loan to value is where I want it to be. Let's say you guys want to refinance some houses?
No, we don't necessarily need to do that, but if I want to keep going, or if we want to keep going, then what I'm trying to do is like our bank is so conservative.
Mm-hmm.
And so they're even down, when we had almost a $2 million loan against our trailer park and all the utilities and everything. Now we're down, to like 200,000 is all we owe now, but they still want to keep everything. So we're like a 25 to 1 value. They're not giving us our equity back.
Oh yeah.
To go forward.
Super simple. Super simple. Let me teach you what to do. Start contacting banks. Do not give them your social security number. Do not have them run your credit. Tell the banks that, hey, I've got this, I own this trailer park. It's worth $2 million. I owe 200,000 on it. I want to refinance the deal with a new bank. What I would do if I was you, Monica, if you guys don't need the cash, then just do a line of credit against the bank, against the trailer park. So let's say that you want to find a bank that will be able to do a line of credit. And so let's say it's worth $2 million and you can get a 70% or 75% loan to value line of credit against that property. Then you would immediately have, $1.5 million less the 200 you owe, 1.3 million available. Then you don't have to use that unless you want to use it.
Well, see, and that's kind of what
that pays off the first lender. He's out. You don't have a loan with him anymore.
Okay.
Now you have the loan with the new bank.
Yes, that really makes sense.
What I would do if I was you is I would go to your current lender and tell them that's what you're going to do.
Okay.
I would call them tomorrow and say, listen, here's the deal. We love working with you guys. We've had this loan with you a long time, but we want to put a line of credit against our properties in order to buy or against this trailer park in order to buy more properties. And so if you guys don't want to do it, we're going to go to another bank and we're going to get this done. But we want to give you the first chance. The thing's worth $2 million. Get an appraisal. It appraises
I got an appraisal.
So you got a $2 million appraisal. We owe 200. I want a $1.3 million line of credit. What's your term? What terms can you give me? Or do you want me to move this to another bank? And if they say, hey, this is not what we want to do, then just move to a new bank.
Okay.
I'm telling you right now, though, in this lending environment, that'd be an easy loan to get.
Okay. Okay.
So you'll go through and you'll start calling local, go with the small. So you think about the size of the loan, you're going to be, $1.5 million. That's a small bank. Most small banks can handle that. So you need to make sure that the bank will have at least go with make sure the bank has that you find has at least a $2 million legal lending limit. Okay. If you call them up and it's a real small bank and they got one branch and their legal lending limit $700,000, that's not who will work for you, right? You need to call a small bank, make sure they have a $1.5 million to $2 million legal lending limit. Find out what kind of terms and interest rate they could give you and make sure that they would be willing to do that type of line of credit. And then you just use it, pay it off, pay it off. Let's say you want to flip a house, you use the line of credit to buy the house, rehab the house, and then as soon as the house sells, you pay off what you borrowed and keep the rest for yourself, right? And then that's how I would go. And once you find that bank, then at that point, you've talked to the bank, you've had the conversations, they're going to be a good fit for you, you're ready to move forward, then you can allow them to pull your credit. But don't get all the things lined up that you want perfectly before you ever allow somebody to pull your credit. Because what if you start going from bank to bank to bank and you have them run your credit and you don't even know if the terms are going to be good and they're going to be able to be a good fit for you? Well, boom, every time you get an inquiry, it dings your credit 3 to 5 points, stays on your credit report for 2 years. It doesn't hurt it a ton, but it drops it. And if you went to 10 different banks, you could lose maybe 50 points in your credit score.
Correct.
So that's how I would do that.
Okay.
Great
I
question.
appreciate it.
Yep. Any other questions on anything I covered today? I think that's about all that I wanted to go through. We're at about an hour here now. I want to let you guys know in this book that you guys are going to be getting next week, the stuff that we just covered on credit score is over 20 pages of the book. So there's a lot more detail in there. And again, I know we go really fast on these calls, but I go into even more detail in that book, and you guys can dive into that. And again, I'm hoping to have that to you guys next week. So we're working really hard to finish it up right now. So any other questions before we jump off? You guys all good?
We're good.
All right. Well, then I'm going to go ahead and wrap it up, and I will see you guys next week. How about that?
Thank you, Matt.
Thanks,
All right.
Matt.
Thanks. We'll see you guys. Have a
See you later.
good week. Bye.
You too.